Welcome to Core Finance, where I'm joined by Dr. David Paul, who's Managing Director at VectorVest. How are you today, Dr. David Paul?
Yes, just great, Zach. It's good to see you back in that seat again.
Yeah, you just told me that you're a doctor of mathematics. Does that have any bearing on the stock market at all?
I think initially, when I was very quantitatively orientated, yes, it helped a little bit. But these days with VectorVest does all the heavy lifting for me. So.
Right.
I don't have to use a great deal of that.
You don't have to get out the pocket calculator or the abacus or whatever you used to use?
I haven't had it out in a while. I think the trick is to be strong when you're right, let the darn things run, and when you're wrong, to run away quickly. So trading psychology is probably more important these days to become consistent than any form of quantitative analysis, yes.
Okay, well, let's have a look at the analysis you brought in today. The first chart is of the London market, I believe.
That's correct, sir. And that little red triangle at the start of October shows that the long-term trend on the London market turned down, and it came down, as you know, to quite an important level of support that's been on the chart for a long time. And it's bounced there, but as we go into the trading day today, the short-term trend on VectorVest UK is down, and the longer-term trend is down. So we've had a couple of false starts, and VectorVest is saying that we should not be entering any new positions in the UK at the moment, and we should be watching stops on any positions that we've got very carefully indeed. I've actually lightened any positions that I have, so very underinvested at the moment. Okay.
Is it too early to say whether we're in a bargain basement zone?
Well, personally, I'm going to stick to the signals, and if the longer-term trend of the VectorVest composite turns back up again, then I shall start to buy into positions. The whole thing clearly very politically led, and some building stocks did exceptionally well yesterday on the basis of a softer Brexit, I read in the newspaper this morning. But I shall be sticking to the signals, and at the moment the signals are saying conclusively that we're heading down. The FTSE's up 1% again this morning, I believe, so it's a day to sit and chill.
Okay, let's have a look at the charts you brought in on stocks.
Well, that's the UK market again, and the next chart is in fact of VectorVest USA, and VectorVest USA showing a similar picture. It moved up strongly on Monday, and then of course it lost all of that on Tuesday when I think it was the bond market made the final decision by 3-year and 5-year bonds inverting. Inversion doesn't cause a recession, it's a symptom of a recession. So, and I think that put the frighteners on the market. The US market was closed yesterday because of ex-President Bush's memorial service. So we'll see what happens in the US today. But again, as in the UK, the short-term trend is down, the longer-term trend is down, and that has been the case since the 5th of October on VectorVest. So we've been out of this market now in the US for 2 months.
Right, and would you be using the signals you have there to trade the indices if you were that minded? Is that what people would do or could do?
I have presented a short-term spread betting system to trade the Dow or the S&P 500 based on the short-term trend of the overall market, and that gives some really good leading indicators. In fact, I'm presenting that at our Birmingham user group at the weekend.
Well, it's a shame you didn't tell me about that. That's exactly my sort of thing. So maybe I'll have to rush off to Birmingham.
Well, it trades the S&P or the Dow based on the short-term trend of the VectorVest composite, and that's had a very good run recently. It's been long twice from the bottoms.
Is it a decent price? Is it attractive to potential traders, would you say?
Well, they can try it for £5.95 for 30 days. If it's for them, then it's £49 a month. And if it's for not for them, then we shall remain friends.
So it's not an expensive system. It's not
an expensive system. And my little seminar on how to actually manage the risk and take the signals comes free with that.
Okay, great. Well, that, as I said, that's my particular speciality in index trading. But let's go on to the stocks finally, which I was trying to flag up abortively before. First one is Ascend 10 Group.
This is my favorite stock in the whole world at the moment. It's a US healthcare stock. And every day VectorVest puts a valuation to every share in the market. And the green line above the candle plot, Zach, is our valuation. So it's significantly undervalued. In the window below the price, the line study is showing earnings per share. And over the last year, earnings per share on this share has grown strongly. It pulled back to support in the sell-off during the course of October and November. And it's now pushing on that top trend line of that little triangle. And if the general market in the US can turn up, if those support levels can hold, then I think that CNC will move very strongly on the upside. This share hasn't put a foot wrong in 10 years, growing earnings per share every year above 20% for the last 10 years. A defensive healthcare stock, one of my favorite stocks in the whole wide world.
Okay, and next contender?
Okay, well, the next contender is a small-ish. First of all, I have to get my glasses on to see my own writing, but CNC's got a market cap of 30 billion, so a reasonable size of a company. Molina Healthcare is a much smaller company with it's still large by UK standards. It's got a market cap of $8 billion. It's got exceptionally good VectorVest numbers, and as you can see recently, earnings per share caused us to revalue the share. So the green line recently moved up through the share price. Now, the share price is in the throes of a strong uptrend and has pulled sideways in what technicians like yourself would refer to as a tight flag, which is a very bullish pattern. Because I knew you were going to be here and I knew it would warm the cockles of your heart, I've put on an MACD indicator as well.
Yes, I was wondering about that.
And the MACD is showing reverse divergence or hidden divergence, or what a technical analyst in the US that I've got a great deal of respect for, a gentleman by the name of Jeffrey Kennedy, he calls that a slingshot. Yeah. And it invariably precedes a fairly fast move. Clearly, 70% of the exercise is the overall market. If the overall market can start to move up the page, then we get one of our buy signals from the overall market, then I think that Molina Healthcare will move up strongly. It specializes in healthcare for relatively low income groups, and it's done very well out of Obamacare.
Okay.
And the third one, of course, is the big fish in the pond, which is United Health Group. Now, this fellow has got a market cap of $267 billion. It's a Dow 30 stock. The chart has been moving up the page. Again, the green line is our valuation, and it's undervalued. Earnings per share is growing, and my favorite line from Warren Buffett's mentor, Ben Graham, is that earnings per share growth is the engine that drives the share price. And if you own a little shop and that shop makes more money next year than it does this year, then your shop is worth more next year than it is this year. So earnings per share. And working with VectorVest for a long time now, I found that the smoother that earnings per share curve is, from the bottom left to the top right of the little window, the easier goes the trading. And VectorVest does all that heavy lifting for you. I tried to keep the fundamentals under control when I started investing in 1982, and I failed. The annual report just piled up in the corner of the office. My first degree is in mechanical engineering. I have no formal financial training, so I just couldn't keep it under control. And until I discovered VectorVest, I was primarily a technical trader. Now that I've put the technicals together with really, really good fundamentals, I found that my hit rate has gone up. And more importantly, in the hit rate going up, my risk to reward has gone up as well, in that I'm making an awful lot more when I'm right than I'm losing when I'm wrong. And that's where
you're running
money comes
good
from.
Companies, basically. You're running the profits on good companies.
That's what I'm trying to do. And if I'm wrong, run quickly. That's what I'm trying to do. I think the last chart shows United Healthcare, and that's a 5-year chart of United Healthcare, and you can see how that thing has moved up the page over the last 5 years. Earnings per share growing, and it's going the right way.
So it's a smooth progression in volatile times, basically.
That's right. It pays a quarterly dividend. It pays a relatively small dividend, but even if you're an income investor, a large dividend is really not that attractive if the company can't grow that dividend. So I'm happier even in an income portfolio with a reasonably modest dividend in a company that's growing earnings strongly, because if it's growing earnings strongly, then that dividend in cash terms will rise enormously over the years. So those are three healthcare stocks, defensive stocks in the defensive sector. The technical picture on all three looks excellent. The fundamentals of all three are excellent. The only thing that we have to worry about is the overall market. VectorVest advocates buying really, really good shares that are rising when the general market is rising. And at the moment, the third box can't be ticked, and we just need to wait for that. Now, I'm at VectorVest, we have a model based on earnings, interest rate and inflation that Dr. DeLido, the founder of VectorVest, has been working on for 30 years. And he still believes that based on those three things that we're still in a bull market, a late cycle bull market that can still have a reasonable run. Although the 3 and 5 bonds have inverted, the 2 and the 10, which would be much more serious, are still okay. And even if those do invert, normally there's 9 months to a year before the stock market actually reacts to that. So we could quite easily have a push up to take out the 2018 highs in the early part of 2019. But without a doubt, we are in a late cycle bull market, in my humble opinion.
Let's see how it goes. Dr. David Paul, Managing Director at VectorVest, thank you very much indeed.
Zach, thank you.